Good morning. My name is David Kircher. I'm with Wisconsin Business Development and Lincoln Opportunity Fund. We're here this morning to prepare for Marketplace 2015 and in a particular area of what do we do to obtain financing or funding for my business? What are the resources we can go to? How do we prepare? So this is more about preparation than who we go to, but we'll touch on that at the end. I've been asked in this section to review some guidelines for overcoming obstacles to financing. But first of all, I'm going to give you a real quick overview of who I am, what our company does. I'm a lender with Wisconsin Business Development and Lincoln Opportunity. Been with the company for just about 20 years. And prior to that, I have 20 years of banking experience. So I've got a number of years with a number of types of business over time. I've seen many more successes than failures, but I have seen failures and some of the pitfalls that have caused that. Wisconsin Business Development is a certified development company whose primary mission is packaging SBA 504 bonds for commercial customers of commercial banks. Over time, Wisconsin Business Development has also expanded its envelope of services to access other programs for the bankers and their clients, utilizing government programs, whether they're local, state, or federal. The territories of Wisconsin Business Development and Lincoln include the state of Wisconsin. Wisconsin Business Development also reaches into the state of Minnesota. Lincoln Opportunity Fund is a CDFI, Certified Development Financial Institution, which actually started in 1989 as Lincoln Redevelopment Corporation. Wisconsin Business Development folded in Lincoln Business Development and rebranded as Lincoln Opportunity Fund to go statewide. Let's get into the topic, overcoming obstacles. There are four bullet points here that we're going to cover real quick. Planning for financial needs, credit risk, documenting ability to pay, and available resources. Planning for financial needs, planning is everything. You've heard the term business plan, and you will hear that forever and ever. What is your plan? Even, it's not just for startup businesses, but mature businesses as well. To have a plan, to revisit your plan, modify it as time changes and your markets change. This is the most important strategic piece of your business. If you need assistance with your plan, resources are available, most notably Wisconsin Women's Business Initiative Corp., the SCORE organization of SBA, and the SBDCs of the UW extensions. Those are the small business development centers. They all have qualified advisors who are experienced and knowledgeable in providing assistance. There may also be personal resources you may go to, a certified public accountant who is able to assist you in planning, an attorney, or a personal friend who has experience either as a startup or a mature business. In credit risks, there are 5 things here. Your type of business, what industry are you in, location of the business, owner experience, owner equity, owner credit history. The type of business poses a potential risk in that you may be in a very competitive environment. You may be in a business that has a history of failure. Of particular note is bars and restaurants, which commercial banks aren't really excited about. However, while there are many, many failures, a higher percentage in this industry, there are many success stories out there. Retail businesses in general may be a very risky business because of competition that comes and goes. Location of your business, what is your market potential and your visibility? Transportation may be a factor that if people can't get to your business, that could be a problem. Owner experience, what's your skill set in coming into a business, or what's been your history of running a business. There have been people who have failed or shut down their business for cause, under control liquidation, and have started up again. Some successful and some are repetitive failures. Your owner equity, often referred to as skin in the game. Very important. What are you bringing to the table? Either cash or experience or equity in property and equipment to produce a product. What are you bringing? Is there friendly debt, perhaps from friends and family? Is there levered debt, but do you have the capacity to repay any debt? And your own personal credit history. Clean credit, of course, is most favorable. People do have problems. Problems have resolutions. If the resolution isn't addressed, often a reason for a turn down by a bank or a potential investor. Planning for financial needs. For an existing business, your business plan. You hear this over and over, that your business plan is your roadmap. It tells us what you do, where you want to go, and how you see yourself getting there. Your sales forecast based on what's your product, what's your market, what's your margin. Budgeting, including all facets of expenses for the business. What may be your capital needs as you grow. How do you budget for that? Very important to include a narrative assumption on your budget so that all items are explained. And we know, you know, what your variables are. Accuracy in financial statements. It doesn't help the cause if you have garbage in, garbage out types of statements. If you believe you can do your own, there are many pitfalls you could fall into, and not a very good practice. For a new business, realistic financial projections. Again, telling us how you see yourself progressing, what are your assumptions for your growth and supporting assumptions to get there. Documenting your ability to repay. Business cash flow. This goes to, again, to projections and assumptions. What is your capacity to make a profit, to have a profit to pay yourself, least of which to make your payroll on a regular basis, and capacity to service debt at whatever level it may be, and show your ability that you have sufficient liquidity to operate your business on a day-to-day basis. Your business tax returns, there's no greater auditor in the world than the Internal Revenue Service. While you may not be audited ever in your life, there's always the chance, the 10% chance that you could be pulled, and then you would have to explain what your tax shelters are and how you can be operating a business with no profit necessarily. They are the watchdog, and again, for a banker, a lender, investor, they want to know your taxes are current, your taxes are filed on a timely basis. Available resources for funding your business. There are the traditional lending sources, large banks, community banks, credit unions. Who you choose to depends on the level of need, dollar amount, and who you learn to be your responsive community lender in your neighborhood. You may not, if you're in a rural area, you may not have many choices, but in a capacity situation, there are correspondent banks that smaller community banks work with. Alternative lending sources, would be your revolving loan funds, your minority chambers of commerce, and people such as Lincoln Opportunity Fund, local revolving loan funds. There's a pool of funds through Housing and Urban Development, Community Development Block Grant funding through various agencies. There are any number of resources that your technical assistance providers can assist you in accessing and helping you through the application process. Other sources, the 3 F's, friends, families, and fools, credit cards, and private investments. When working with a technical assistance provider to get you down this path, you want to follow their advice. When you speak to a lender and if you get declined, you want to find out their reasons for it, and you want to use those as lessons to beef up your plan and try it again. Their objective is to help you succeed. I guess at this point I just want to thank you and look forward to seeing you at Marketplace 2015.